Hey guys, it's Carter, and today I just wanted to make a quick video on the SPY. I just want to explain what on earth is happening right now. So join me in this video, it should be quite interesting. Alright, so we have now seen around a 17 or 18% fall from the highs here on the SPY in less than 2 months. Crazy cascading decline we have seen. And I believe we're actually going to be avoiding a bear market here. Now, analysts will say that a bear market results when the SPY drops 16 to 20% from the all-time high, and we have now dropped around 18%. So some analysts are going to be coming out and saying we're in a bear market. Now, I don't believe that's the case because I think there's a more powerful signal that is about to fire here by my very own indicator that I have developed that is going to nullify any bear market entry signal. So what do I mean by we potentially drop slightly further and actually avoid a bear market entry signal? Because we're going to see a more powerful signal fire, and that's going to be shown by my very own indicator that I have developed. And that indicator factors in the speed of declines on US major indices. It also looks at the depth of those declines. It looks at market breadth in US traditional markets, and it is also factoring in objective fearful sentiment. So given all that, this signal that I have developed is likely going to fire for only the 4th time since the year 2000. Incredible stuff here. So it's actually on the screen right now, but you can't see it because it hasn't fired yet. But if we go back to 2020, it fired during COVID. And this was one of the best crashes to buy if you bought here. So it identifies capitulation, and this was one of the best times to buy here. And then if we go back to 2009, it fired a couple times here, fired here, where there was a 20% bounce within weeks, and then it fired at the exact low of 2009, and the rest is history. This was a monumental time to buy. And then you even saw my capitulation identifier signal fire at the low here in 2002. You saw a 20+% rally within weeks, a double bottom, and then a multi-year bull market ensued. Now, I'm not saying this signal captures the exact low. However, it does identify capitulation very well. So this capitulation signal will probably end up firing this week. And that's the only way we avoid a technical bear market, because capitulation in my books trumps a bear market entry signal. And we could see a V-shaped rally when this eventually does bottom out. I am not saying we're done going lower. However, it's becoming less risky to be in the stock market than more risky, in my opinion, right now. So we're at 505 right now on the SPY. We have support at around 480. If we continue to fall in free fall fashion, then we could probably confirm our support of the 2022 bull market top here that we never came back down to do once we broke out of it here in 2024. And then we could also even retest this level around the 450 to 460 level in the case of another 10% to the downside, which is not off the table right now for the SPY. We could even continue to flush further. However, I believe that it is the time to start nibbling if we are seeing capitulation, not going all in at these levels, because we could still see a large drop to the downside, even much larger drop to the downside. However, it's becoming less risky to be in the markets right now than it was up here when we were at all-time highs. So my own strategy right now is to wait for that capitulation signal and start to nibble even more on these major indices, because I do think once we do find a bottom, which no one knows when we are going to bottom, there's going to be an impressive V-shaped recovery and possibly a 10 to 20% rally within the weeks of the bottom.